The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN. Make sure you're listening to us anywhere on your mobile phone at TFNN.mobi. And, of course, watching us live on Tiber TV, TFNN.com, where you can see the charts of all the different traders, 9 hours of live trader commentary each and every day. Let's check it out where the market's at right now. We got a little bit of a mixed bag right there on the Dow and the Russell, still trying to fill in those gaps. And let's see. There we go. Russell actually has filled in the gap now. We got the Dow still working on it. The S&P already did. NASDAQ already did. So NASDAQ, though, sort of bouncing back down, sort of fighting that 1784 level. We'll see if it has the juice to push through it here after after that Juicy Fruit song. We'll see if the juice is there to push on through and move on up. We got NASDAQ up 12 points. We have the Russell up 0.4. Dow currently is down 80 points on the day. We got gold is down a whole buck at the moment. Silver pretty flat at the moment compared to settlement. And we got copper, though. It's moving. It's down almost 1%. I got oil down just a mere 15 cents. Natural gas down 4% on the day. Big mover of the day. It often is the winner. We got corn right now. It's pretty flat on the day. Basically at zero, or at the moment it's down a tick. We got soybeans right now down, actually looks like it's up 6 points. We got the euro dollar is down 43, pound dollar down 12, Aussie dollar down 41, euro yen down $1.15. So a big mover there in the Forex market. We got US yen's down 51, pound yen got a good move down to $1.03. We got dollar CAD down 50 pips. We got dollar franc up 15 on the day. All right. So that wraps that up. We had one potential trade, and at the same time, when I went over the trade with you, I talked about yesterday, be careful on this trade just because of the stats and the way they lay out. And, I said it might even be one you want to, avoid, but I still want to walk through it with you, okay? Because I like to show you the ones that, especially when I'm like, hey, we may want to avoid this. I want to just go through it so that way you're ready. You understand that you don't trade every news announcement, even if it says impact. Yesterday I talked about the dollar CAD trade coming out on the CAD GDP. And I said, hey, the average move is 60 pips high to low, but the problem is it only breaks that 42% of the time. And when the dollar CAD GDP, let's see, it came out this morning, came out at expectations. Guess what? Shouldn't expect a large move when it comes out at expectations. And I said this might be one of those strategies you want to avoid just because the percentage is so low of how often it breaks 50 pips. And so let's go look at it. Let's see. What did we get? What did it work for you? Okay. Well, we got a right there. And then we go over here to 10. I have to go a little further on my chart because I got these 1 minutes going on. Here we go. Let me we'll zoom back, and then we'll just drag it on over. There we go. Okay. So right there, we got to move up to, really it made its high pretty quick. We got 38 pips out of the trade. And, again, that's on a no news trade. You probably broke even. Maybe you made a little. If you got it cheap enough, you might have actually pulled out about a $10 profit on the trade. But really just not the best trade overall that I'm going to be looking for whenever I'm doing any of these trades like this. I really want to see more movement. And I want to see a higher probability. I want to play those stats. I want to put them in my favor. So just to, again, to highlight when I say, hey, be cautious because percentages aren't there, that sort of really helped to show that, hey, the percentages really were not there. And if we go over and look at, we were actually up near that one deviation level. I just wanted to confirm that. I'll back out now to 5 minutes now that we zoomed in on the news. We'll look at it and zoom back in on the actual trade. And we can see it went up to pretty much like just within, a couple ticks of one deviation. It actually passed one deviation high to low on the spike. We got a volume spike at the same time that it hit a one deviation high to low. And usually we're looking for a break below that next bar within a few bars. We didn't get the break below immediately, but we finally did. It went to chop for a while, and then it trended on back down for the rest of the day. Now, if you did get in that trade, and let's say you pulled off a 3 o'clock expiration, then definitely the trade has worked out very well for you. But if you're looking at, like, say, at 10 a.m., then, at best, you probably broke even or made a little bit on the trade. All right, well, that dollar CAD trade there, again, not the biggest one I was looking for. We got Chevron came out with earnings this morning and had a little impact on the Dow. So let's pull that up. Let's look at Chevron over here. We were looking at this morning on the bull bear binary hour, and we also had a nice S&P trade. We pulled off. You can see it came on down right after their earnings, which came out at 8:30. And so we can move that over. You can see it just started turning down right before, pre-market there, right before the earnings started pushing on down, and then flew down right to, this is just tracking, this little dashed red line here is just tracking the low of the day, right to a volume spike. And look at that volume spike. I mean, it got broke by maybe a tick and then pulled on back up and was really the big moving component there on the Dow. And what we can do is we can actually put a chart side by side up here next to Chevron, pull the Dow up, and if you're a futures trader, it's good to be aware of these high component movers, especially when they have earnings, to know, hey, how may this impact the trades that I'm doing right now on the Dow futures. So look at some of these major stocks. Have Google up, have Amazon up, have Apple up when you're trading Nasdaq. So they're small things, but they to see they're a lot of times they're going to move and it's going to push everything else. And so what I want to do for you is now I want to go over, like I said, and pull up the same chart over here on the Dow and just look at it side by side and see, the similarity in movement on these two trades. So let me pull this one up here. There we go. Got that chart on there. Dow's going short pretty much all morning long. Of course, it's trading a lot more because it's had, extended hours. And let's go and look at 8:30. Let's zoom in over here. See what we had happen. Well, at 8:30, the news came out, and we got a little push down. It wasn't a lot. It was more. You can almost see right here. We really just got that big move. But Chevron, the news came out, and then it took its time. And of course, the big move happened after the market opened, which makes sense. Okay, so if you don't have great earnings, you're going to get that move. Sometimes you'll get a big spike, but your bigger move is going to happen right there after earnings. Moves right after open, I mean, because it's a stock. And so, seeing that trend down and expecting a much larger move the second that thing opens back up. And so we go over here and we look at the Dow and see what kind of correlation we got. Well, the move was already happening because the Dow priced it in immediately. So it already had that price in going on. And but it just was weighed down by Exxon, weighed down because it came out yesterday, weighed down by Chevron. Also had that volume spike that came on down, and then after bouncing around a while, it flew up, came back down, and finally got that semi-trend up. But it was off of a 1 deviation level. We're just a deviation. We're actually a deviation high to low again. We're at a deviation high to low right at the same time as we get a volume spike, and that's when the Dow turned around. So we got a volume spike over here on Chevron a little bit later, and it stopped and turned around. And like I said, I can back out on that a little bit. It'll pull back up. It's still weighed down. It's not that it has a whole lot of strength going on at the moment, but the big thing was we had that 1 deviation move on the Dow, and it turned around. Now this morning, like I said, we were going into and we were looking at the S&P 500 E-mini futures, and on the bull bear binary hour, and it was pretty cool. We were talking about get the bonds over there. We were just going in and all these different methods. We got Basil has his Chapman waves, and Tommy uses Tiger Gartley butterflies with Fibonacci levels. I use deviation levels, and a couple other things that I use, and it's all of them lining up, coming together, and really turned out to be a solid, great long trade retracement over here. And here I'll pull up the S&P. We'll check that out, and then we'll also go back and do a review of the Google earnings trade. So that worked out really well. Yesterday we put it on during the radio show, and I got some pretty good fan email came in. People making some nice change on that one. Anyway, so the market was moving on down. Our show's happening between 10 and 11, and we're basically just waiting on this pullback, and we get it, and then boom, it just takes off. And I'm seeing the same thing over here, even on the shorter time frame, sort of giving me a heads up that this move's about to take place. And I'm trying to back out enough so I can see it, but not too far. There we go. So right around 9:30, same time we started seeing that Dow bounce off that volume spike. And again, we're getting a volume spike right here on the S&P. We got two of them in a row right there off the one deviation level. And Dow got that bounce on the deviation level, and then all of a sudden things start flying on up. Right there I got 1, 2, I got 3, 4, 10. I even got 5-minute confirmations all going long. And then the thing just takes off, runs all the way back up, and hits our settlement price. And now it's pretty much in a battle. It took this 10 minutes seemed like it took like an hour, so this 20 minutes. But it was this battle first between the settlement and 1784, and that's sort of the level it's been trying to break. S&P so far has not really been able to break that with any kind of strength. And so what we're trying to do is see if it will do that. Right now we're in the lunchtime hour. Things are sort of shutting down. Guys are out to lunch. They're chilling out. And there's not a whole lot going on. But we'll see if it does decide to do a break here after lunch is over, going into the end of the day. Keep an eye on those bond markets, for a little bit. They'll help you out. And, of course, early in the morning they're a lot more helpful just because, the limited hours on bonds. But anyway, so we got our S&P move, and we'll see if it, if it does eventually fully turn around. So I got a nice little short, I got a nice long trade on it, got a nice little short scalp out of it, and just on the shorter time frame. But the longer term trend right now we got is still, up. So we'll see if that continues or if it's just going to give it back. But so far I got my short term move is definitely staying down. I took off my long trade because of that and hit my trailing stops there, and gonna just keep my eye on it. Now for the next thing, why don't we go over and let's see, we may have who knows, maybe we'll have a gold trade coming up. Gold's going to expire here in the next, 12 minutes, okay? So see if we can pull anything up on gold. And there we go. All right. So with gold, we might have, let's see, we're just looking for a confirmation. Just got a pretty big spike right there on the 5 minutes in volume, but sort of choppy at the moment. We'll see if we get enough to give us a push down right there into the end, if there'll even be anything on the market. I'm pulling it up right now personally on the scanner, see if I can find anything. We got signals all over the place to go short. So the big trick, can we go short enough to make it happen? It's sitting right at 1239.8. So right now, the only potential strike you're going to be able to get a fill on is going to be 1240. So right around there. So we'll have to watch that one really, really close. All right, stay right there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks. So we're just watching this one really close to see where this one's going to end up. But we may have ourselves a trade, but I don't know. I'm not looking. That's so close, like 3 ticks away, and I really don't like to push it. So, anyways, we'll see once it pops up fully if we'll get anything there. But you don't ever want to push these trades, especially these premium collection trades. Like I said, they get really, really close. And let me get a chart up here for you on it to show you what I'm talking about how close it is. And right there. Let us the Google Amazon up. We'll come back to that here in a minute. But just flip on over real quick to gold. See, I mean, it's like at 1240.1, 1240. So, like I said, the strike is going to be 1240. The trick is going to be if there's an entry, soon enough, late enough, whatever, right there for it. Because any of the other strikes are going to be worthless with this much time into expiration. So I'm just watching that one right now, and I don't know if I'll do anything on it. But I'll keep it up there. We'll look at it. And there's only a few minutes on that trade as a potential trade to do. So we'll just, like I said, watch it step by step, see if something does appear that will work out to be, what we need in order to execute the trade. Let's see. Let's put that chart back on the screen. Get it over here for you. And we'll stick that ticket on top. And there we go. So Yeah, I mean, it's really, really close on that trade. So, we got 4 minutes. Now, here's the big issue, okay? On the Nadex binary, something you could be aware of. If you're doing like these kind of, there's premium collection and there's expiration premium collection. I do both. I do a lot more premium collection than I do expiration premium collection. Expiration premium collection is premium collection where you're going in to literally, think of a credit spread that's going to last 15 minutes or less, okay? So the problem is, in the last 2 minutes, you can't do anything about it, okay? It's just got to settle out. It's sort of like if you've ever traded Russell credit spreads. One of the rules that you learn on Russell, and especially if you have any kind of in-the-money contract or whatever, is you never hold that thing into expiration, because once the RVX settles, it can have some really crazy settlement prices, okay? And it's waiting all 2,000 stocks to come in. They do the calculation. So you never really want to hold that thing all the way into expiration. Well, on the EPCs, ideally you don't want to hold them into expiration if you can avoid it. So, if you're getting in and it's like just a couple ticks away, there's really not any kind of safety margin, no safety net. I mean, this thing's at like 1240, at 1240, like right, I mean, it's right there. And it's looking at the last 25 contracts that are being traded, and if it's worth it and if it's working out. And I mean, just a couple ticks makes literally all the difference, because they're going to take the last 25 trades, okay, and they're going to average them. And when they do that average, then the net difference is going to be the actual the trades that they do. So what do I mean by that? They'll take the last 25 trades that happen right before expiration, and then they'll take the average of the middle 15 contracts, okay? And so when they take that average of that middle 15, it has to be like right in the money. It has to be at or below. Now, this is in your favor if you're short, at or below the strike. And so if you're going in, you went short on this contract, the at or below is a good thing. If you're long on the strike, the at or below, not such a good thing. Because you need it to be greater than the strike if you're long. You need it to be less than the strike if you're short. And so, if we go over and we look at this, like right here, it was about at 59 by 60. So if it settles at 1240.01, okay, then basically the long trade won. If it settles at 40.0 or less, then the short trader won. And so it'll be really close. I mean, there's a lot of ticks like right here. And another thing that can help you out, let me maximize in on this grid cell right here, is understand that like all these ticks up here, they counted more. Okay, they had more of an impact because there's only been a few ticks down here at this lower price. And so one thing I'll do is I'll bring up time and sells to watch where are all the prices going. Okay, so all these prices, 1241, 1240, 1241, and again, they're going to take out the top 5, they're going to take out the bottom 5, they're going to average the middle 15, and look at how close this thing is. I mean, it's like this right on the strike. So it'll go right into expiration, literally, and we'll see where it ends up. Okay? All right, we'll stay right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, come on back to the Diagnostic Trading Hour. So, yeah, it was really close, and it expired down just under 12:40. So if you did that, you were nuts. You shouldn't have. But if you did it, then I guess you won if you went short, and you lost if you went long. Way too close. So, all right. So let's go over. Let's talk about this Google trade we did yesterday. And it's not just the trade. It's knowing what time to do the trade, what prices to do it at, all the different pieces. And I usually cover this, if I can, on the radio show. So I covered it the last 2 times, knocked it out of the park on both of them. And so we'll go back, we'll just look at them and review them. And I mean, now, sometimes I get in this trade 10 minutes till expiration. Sometimes I get in this trade within, between 12 and 1. The last 2 times I got it between 12 and 1. So it really just matters what the prices are at, what the pricing is at. There was a lot of implied volatility that came into the market shortly after. We jumped in there, and most of it stayed with it for a good chunk of the day. It did back off for a little bit, but it picked back up right at the end of the day there. And so we'll go, and I just wanted to look at this with you. And the idea, we had Amazon and we have Google both coming out. Amazon did an immediate, at first it did a bump up, and then it ran down. So like right there, it went up, and there wasn't, and then Google ran down. So it ran up, Google ran down, and so there just wasn't a whole lot of movement. So I'm sitting here trying to be as patient as I can. Then Google starts running up, so it starts running up, okay? And then Google starts taking a dive and moves on down. Definitely wasn't its big a move, but it's still a 50-point move on Google, and within a matter of 10 minutes. And then Amazon also takes a dive, and about 30 points, which is a lot bigger move. 35 points there on Amazon for it to drop that far, just because of percentage of price. Amazon's priced at, or was priced at 400. Google at about 1150. So from where they were yesterday. Anyway, so then as Amazon and Google both move down together, then you can sort of see the the little volatility things going down a little bit. And again, look at Google's pulling it, because see, Amazon shoots up just to really help put this in perspective here. So we got the 1500, and we'll go over here, try to highlight the same time frame. There we go. Back out a little bit more, move it over a little bit more, trying to line it all up for you. All right, there we go. 15 to 1515 or so. All right. And let's get this one to 15. There we go. Okay, so now we have all three of them lined up here. And so you can see, Google shoots down, and then let's look at NASDAQ. NASDAQ is trying to shoot down, but, finally does pull back a little bit down. Notice, again, Amazon's pushing up. So it does that with that push up on Amazon. That's holding it up. And so it's just trying to figure out what it's going to do. And then Google shoots up. So, and then look at what Amazon does. Or look at what NASDAQ does. So 1503. So it's following Google. Okay. And then when it goes down, okay, Google's the one going down. NASDAQ is following it. So Google's the one over here on the left side. NASDAQ's the one in the middle. Amazon's the one on the right. Then Google's going down. Okay. And Amazon joins it, which just accelerates the NASDAQ even further, because now you got Amazon and Google both pushing in the same direction. And Google hesitates. Amazon's still pushing down, so it has a little bit of a down move right there. Google does one more big push down. Amazon's also pushing down. We get it. Now Google starts pulling back up, but Amazon's fighting. So Amazon's holding it down. And then if we go here over into the end, then we see that it basically Amazon was not willing to pull back. So Google did do quite a bit of a pullback. I mean, it went down to 1095, ran back up to 1140. So it did a massive run back up there. But Amazon did not do the run back up. So Google drug it down, but Amazon kept it down. And so it allowed for some really sweet trades. I mean, we're talking about trades where we went in, we risked $25, made $25, 100% return. We're talking about trades where we went in, we risked $10, and we made $90. And if you did 100 contracts, then you risked 1,000, you made 9,000. I had traders saying, "Hey, thanks. Went out to dinner, made $1,000, made $5,000. Just on that one trade in a very short period of time." And we put this trade all the way back on like at 12:30, and just expecting that there would be a pretty large NASDAQ move when the Google and Amazon combo earnings came out at the same time. And all of that is using Nadex. Now, you can't do this on every. You could try it, but I don't do this on every earnings release. You can try them on the other earnings releases, if they get bigger and bigger, but it's just having this really big, expensive stock inside of the NASDAQ that really helps it move. And, I watch it every time. So, but I'm careful. I don't just, if you watched on my show yesterday, you saw how I was like, okay, I'm not getting in yet. Okay, now I'm going to get in my first layer. And then, okay, now I can get in my second layer. And so I had to really watch and be careful with that. And let's see here, going on over to the site. If you don't have a TFNN, link there, make sure you hop on over to TFNN, and then go in and click on the Nadex banner on the right side. This will get you access to start following along. If you go back and you watch the radio archives out of there on Tiger TV, you can go down here to Diagnostic Trading Hour, and right there, number 7, and you can see the trades we're putting on, and stuff we're talking about. And you can actually see the archives, and there's a lot of different information over here that you can look at. But it's really helpful. But once you get that done and you're going through, get that education, hop on over and click on the Nadex banner on the right side of the page. Once you've clicked on the Nadex banner, then what you're going to do is simply go to the trading menu and go over here to the trading platform. Okay. So, and you can learn all about the trading platform and how it works and all that stuff. But the big thing you're going to want is you're going to want a demo trading account. Okay? So you want to get in that demo trading account, put in your username, your first name, your last name, your phone number, your email address. They'll send you a password. You'll be able to get access to that really fast, so within a few seconds, and you'll be able to log in and be able to actually start demo trading this. To get a live account, what you're going to do is you're going to go right over here and click on Create Account. It's only $100 to fund a live account. It takes about 5 minutes to go from start to funded. And now you can fund it with 100, 500, 10,000, whatever. They'll do I think an immediate $500 deposit for you. So if you do ACH, and then after that they'll do immediate $1,000 ones, and then of course you can do wires, or you can do larger ACHs. It's just you have to wait for it to clear, or you can do wires. Whatever method is most convenient for you. But just to get you started, and then the big thing about opening a Nadex account that helps out with your demo trade account is if you have a demo account, you open a live account, then you place just a single trade in your live account. Doesn't matter if it's 100 contract for $50 or one contract for $3. If you've traced a trade, you can call up to the customer service department, ask the rep to extend your demo out, and they'll extend out for a year after you placed one live trade. So, and it's just wise to have that demo going so you can figure things out while you're going, not lose all your money before you get going, and then hop into live when you're when you're ready. So, and also it's good to have that demo so you can follow along as I'm doing a lot of these trades, talking about these news trades, laying the different steps out for you. You'll have those different pieces in your arsenal, your trading arsenal, and like I said, even if you're not a news trader, you need to be aware of them, so at least note them down for that. But if you are a news trader, then definitely put down the notes, so that way you are basically ready for what's coming up that week. Now, what about this coming week? What do we got going on? Well, Saturday, nothing's happening. Sunday, China has a holiday. You shouldn't really affect much. We got building approvals coming out at 7:30 over in the Aussie. And let me see. I don't think that's usually a big mover. I'm going to double check, but I'm pretty sure it's not. I'm just going through all my, retail sales will usually move, but not building approvals. We go back and check the last couple months. We have all my little stats engines all built up. And let's see here. Last time December 1st in December. Yeah, nothing to even take note of. And it'll be rated, by the way, high impact. Okay? If you go look over at an investing calendar, it'll have 3 little bulls, or it'll have a red icon, or whatever. And that's one of the things I warn people about is, high impact does not mean good news trade. So it just may mean, hey, it's important for that currency. It doesn't mean it's going to move it today in the matter of minutes or hours. It may be days or weeks. We're going to go and we're going to have manufacturing PMI, and that's going to come out. Let's see here at 4:30 on Tuesday. Last time we had that trade was back on the 2nd of January. And let's see, how did that one? It looked like it worked out pretty good. Manufacturing PMI. And that's a rough trade. It's pound yen is 58% of the time it breaks 50 pips, but on average it moves 75. So that's sort of a tight one. That's not necessarily the highest percentage trade lineup out of the group. And let's see, it's not horrible. It's just not fantastic. Let's see, ISM manufacturing PMI, that's going to come out of the U.S. That also came out on January 2nd. That is not usually just a massive mover in and of itself. But we do get a couple pairs that do move better than that pound announcement. So the euro-dollar, actually now that I pull it back up, I guess I have to take that back. The euro-dollar, 71% of the time breaks 50 pips and moves on average 60 pips on the U.S. ISM report. So pound-dollar moves 70 pips, but only breaks 63% of the time. So really your better trade there on that US ISM coming up is going to be the euro-dollar trade. And let's see, we got the cash rate, the RBA statement. Now, if they change it, massive, massive mover, okay? If they don't change it, then usually it doesn't do anything. And but they had some really big inflationary issues that came out in the last quarter, okay? And so the Bureau of Labor Statistics, they released their CPI number. It came out at 0.8, and let's see, looking at some of the, it was a lot higher than expected at 0.8. The year-on-year number got bumped up to 2.7. Remember, most countries are targeting around 2%. So now the Aussie is just going out of control, so traders are hopping in. And as a result, basically traders are expecting a rate cut anytime soon. So there is a high possibility of a rate cut on the Aussie. And so that's interesting. Let me go in and let me see if I have any immediate stats. If I don't, I'll have them for you by next week. But with all that CPI number, it moved huge. It moved 100-something pips on that last CPI. So I'm just looking over and pulling up some stats on you on that one. But let's see, I got December 2nd. Could be a really good trade coming up here this coming week. We had, I'm going to have to pull them up in the detail. A lot of times I ignore that trade, but due to how that CPI number just came out, we may have ourselves, I'd probably say in one of the next two, a massive moving trade that we can look at. So, going on over, I'm just trying to see if I can find any earlier report, because I know I've logged it before when I expected one. And let's see, what about November? Let's see here. 67% of the time it moves 50 pips, okay? So it does have a high percentage of 50 pip moves, but what's odd about it is the average is only 45. So, but I don't know how odd that is if we just look at the reality of the average being 45 pips, but 67% of the time it moves 50. What that means is when it moves really large. When it doesn't, it moves really small. So that's when we're expecting 100, 130 pip move on the Aussie, if they do a rate change, but we're expecting a 20 to 40 pip move if they don't. But I'd say either this one or the next one, we're probably going to see either a rate change or a big statement about a rate change. So I think we definitely would be looking forward to seeing that kick into gear. That could actually be a really good trade. So it's one that a lot of times I stand aside on, but with the CPI numbers coming out, it may be worth, like I said, trading. All right, so that's going to be the rate statement cash rate coming out 10:30, and that's going to be Monday night. So make sure you're tuning in Monday, and we'll go over that one in detail. That'll be sort of the big play of the evening coming up. Looking on over at Tuesday, just getting you ready for your upcoming week over here. And let's see, so on Tuesday, we're going to have, New Zealand will have employment change and unemployment rate. I usually don't trade the New Zealand dollar just because it's not on Nadex. Construction PMI will be coming out of Britain. Let's see, on the last report that came out January 3rd. And just pulling up my stats on that one. Yeah, I didn't even touch that one. So, all right, we'll wrap up the rest of the week right in this next segment. So stay tuned. We'll be back right after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, going back here to the Diagnostic Trading Hour. And, okay, so just looking over the week, getting all the, like I said, the final pieces there, put together for us so we can take advantage of the news and be aware of the news and what's coming up in the news. So that way, either one, we profit from it, two, we don't get hit by it or surprised by it. Okay, so looking on over, and I'm starting to get emails and stuff, people saying, I used to hate the news, but I'm actually starting to become a believer. So it's pretty cool. It's a lot of fun. And it's very simple. It feels a little confusing to begin with, but it gets really, really, really quick, really simple, really easy. Okay, so we had that construction PMI. We were looking at that one, and so I was going back and pulling up the last couple of reports, checking those out, and seeing what we got. And on the PMI, we're looking for a move of, wow, there we go. Pound yen, 70% of the time breaking 50 pips on an average move of 72 pips. So, yeah, definitely going to be a nice news trade setup right there. So, for the PMI coming up on Tuesday. And then looking on over a little further, on Wednesday, we got the pound services PMI. And let's see, let me check on my reports on that one. And I'll go over these again in detail for you next week. But, yeah, services PMI looks like it's not getting the stats. I'm going to go through. May not even touch that one. And I'm just checking to make sure. It might have it. I don't know. I'm going through. The services PMI actually might. Okay. It's not as good. Okay. It has a big move when it moves. It moves about 60 pips on pound dollar, 75 pips on pound yen. But we got a 58% probability of breaking 50 pips on pound yen, only a 50-50 on pound dollar. So it's okay, but it's not near as good as the one the night before. So, if you're being picky, then you're definitely going to be wanting to do that one on Tuesday night versus the Wednesday night. We're going to roll over into the ADP NFP report. That's coming out at 8:15. And usually I don't trade the ADP NFP report. I trade the NFP report. Okay? But let's see what details we got on that one also. And I don't think we're going to have too much, but trying to see if there's anything that might line up. Yeah. The stats literally just are not consistently there on the ADP NFP. A lot of times it's just not big enough of a move to be able to go in and take advantage of. So, again, high impact rating on most Forex calendars doesn't mean high impact move. ISM non-manufacturing PMI. So that one's going to come out. That actually could be a good one to check out. And usually looking at the dollar CAD on that one. But let me look. Had a dollar CAD interest rate at the same time on the last one, so I sort of try to ignore the stats from the ones that have like other just massive moving news reports right at the same time, because it can sort of skew your results by giving you a false impression of the movement. And let's see here. Yeah, it's not like overall without it, it's not really the big thing. So might end up rolling that one out. Right, I'll have to come back to that one and see if I can see anything to justify it. We're going to have Aussie retail sales coming out on Wednesday night at 7:30. And I know we got some pretty decent moves on a couple of the last retail sales reports. And let's see here, just looking at the one that we just had this month. And let's see, we usually get about 40 pips. We got a lot more than that last time. But I haven't looked at butterflying it, but I'm going to be a little more cautious on that one because it moved down. It did come back. It was okay, but let's get some big moves last time on retail sales, so be careful on that one. And we'll wrap up the rest of the week next week, and I'll give you more details. We'll dive into it. We also got pound interest rates, euro interest rates, and NFP next week, so it's going to be a big week with all the different reports coming out. All right, y'all have a great weekend.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
You're watching Tiger TV.